some completely unscientific research. I'm seeing these Tesla cars everywhere where I live. Yeah. There has been an explosion on the highways, at least where I live, over the past year in Teslas of all models. It is extremely noticeable, and I can't say I'm surprised. Look, Tesla's put up a series of very strong quarters, and the way they do that, they just sell more cars.
In this video, we have loads to discuss. A Tesla bull has upped their Tesla stock price target to $360 per share, representing 33% upside from where we are today. In a sign of things to come, Tesla's virtual power plant comes to the rescue again while printing Tesla battery owners a load of money. Tesla may have accidentally leaked details on the next Gigafactory location. GM, aka Government Motors, has finally realized the archaic dealership, aka Stealership model is a death trap and attempts to immediately reverse course. And we have one of the most hilarious examples of absolute, unequivocal brain damage as it relates to Tesla I have ever seen. So, grab your popcorn, ladies and gentlemen. This is going to be good. And before we get into it, if you want to instantly unlock over 100 exclusive videos, plus my 10-year Tesla stock price targets and loads of other perks, including optional access to my Tesla valuation model, join our growing community of thousands of supporters on Patreon with the link in the pinned comment. You can also pick up some Tesla, Elon, and investment-themed merch in the merch store. First up, today Tesla stock down 2.5%, closing $270 per share. Year to date, Tesla stock, it's been volatile as expected. After all, it is Tesla stock, down 32.5%. Over the last 1 year, up just under 11%. As I mentioned, it has been a very bumpy ride. And since bottoming out in late May this year, up almost 30%, yet still, as I point out, year to date, up less than 11%. I personally don't believe this will last. Full disclosure, I want it to last. In fact, I'd rather Tesla stock collapse even further because I'm still buying with every spare cent. In fairness, just to contextualize things, it's not just Tesla that's getting absolutely reamed at the moment. As Gary Black points out, 2022 so far is the fourth worst start for the S&P 500 in 80 years. Let's have a look at this chart. Pretty stunning. Highlighted in blue here, 2022, fourth worst start in 80 years. It should be obvious by now, but what's happening in the wider markets does tend to drag on all stocks. This doesn't make sense, in my opinion, but it is what happens. Groupthink, sheeple, I'm scared, oh my god, yeah, sell everything. This is what happens, hence stocks down. Intelligent investors can sift through the carnage and find opportunities, and unintelligent investors who are driven by emotions rather than their reasoning faculties will just panic and sit on the sidelines. At least that's how I see things. The big question is, how will things play out throughout the rest of this year? And while many emotional investors are panicking, crying in the corner, asking for daddy to hold them because they're scared, there are a few analysts out there who see what's going on and rather than following the herd have actually determined that they believe Tesla has a lot of upside from where we are today. Case in point, long-term Tesla bulls, Piper Sandler.
Tesla here. Let's stay in the automotive landscape here. Automotive landscape says Piper Sandler analyst Alexander Potter raised his price target on the EV maker from $344 to $360 now, citing that while a price cut to Tesla's cars may signal a demand issue to some investors, it's actually a measure in helping the company address its backlog problems here. Now, Piper Sandler has had a history of being one of the most vocal Tesla analysts out there, but here on the day, you're actually seeing Tesla shares holding up by about 0.8% right now, even with this rating that's come out. And of course, this is a stock that just went through its own 3-for-1 stock split as well with Tesla, a little bit off of those levels from when it made the split, but pretty much every equity is off from that time period and that marker to this date right now.
As I say, credibility and accountability both matter. We're looking at Alexander Potter of Piper Sandler's tipranks.com profile. As you can see, a legitimate reverse Gordon here. 5-star rating, ranked number 308 out of almost 8,000 analysts. Drilling down to Tesla stocks specifically, since that's basically all we care about here, I would just like to note, Alexander Potter of Piper Sandler has been recommending investors exclusively buy Tesla stock since 2020, around $145 per share. Not a single hold rating. And obviously not a single sell rating. I might go out on a limb here and suggest that Alexander Potter actually knows what the is up when it comes to Tesla. While most of the dolts on Wall Street were recommending investors sell, or best case hold Tesla stock in mid-2020, oh my god, they're going bankrupt. Big Brain Potter over here was seeing a gigantic opportunity. Curiously, if you were to replace these stock ratings, buy with my personal activity on Tesla stock, they'd look identical because I've literally been buying with every spare cent, not only throughout this entire time period, but going all the way back to early 2016. Seems like Alexander Potter and I see eye to eye, at least on the opportunity in Tesla stock.
Some completely unscientific research. I'm seeing these Tesla cars everywhere where I live. Yeah. There has been an explosion on the highways, at least where I live, over the past year in Teslas of all models. It is extremely noticeable, and I can't say I'm surprised. Look, Tesla's put up a series of very strong quarters, and the way they do that, they just sell more cars.
Just a quick observation here. If you're a longer-term viewer of the channel, you might have noticed Brian here on Yahoo Finance has been very rapidly changing his tune on Tesla over the last 6, maybe even 12 months, which almost perfectly aligns with his anecdotal observation that he's now seeing Teslas everywhere. It's not that long ago that Brian was almost exclusively hating on both Tesla and Elon Musk. I personally believe that Brian is a leading indicator of what many of the other folks in the mainstream finance media, many on Wall Street, in fact, many in the general public, will start thinking and saying in the coming months and years.
The most remarkable thing about that is that you see it without them marketing.
Yes.
They're not marketing.
Well, they are through Elon Musk's Twitter account.
That's it.
That's it.
That is the only marketing mechanism. It's a company that doesn't have to worry about cutting back on its marketing expenses during an economic downturn. Because why? There aren't any to begin with.
I don't think there's an investor relations team there.
We have a website and we have Elon Musk's Twitter account. What more do you want?
Mm-hmm. All right. And cool looking cars.
Hear that final comment? And cool looking cars. I mean, it's amazing to see almost in real time. Brian here has flipped. If you're a long-term viewer of the channel, you may in fact have heard me refer previously to Brian as salty, many other derivatives thereof. At least he's starting to finally get it. And as for the comments on Tesla not needing a marketing department, I mean, well, we know this. It is actually important and bears repeating. As I've said 4 trillion times since day one on this channel, the more Teslas Tesla sells, the more Teslas Tesla sells. Why? Word of mouth. The products are so fucking good they sell themselves. If you own a Tesla, or know anyone who owns a Tesla, you know exactly what I'm talking about. Find me a Tesla owner who will shut the up about their Tesla and won't offer everybody a test drive. Hey, check it out. They don't exist. Tesla's products are so compelling. They bring so much joy to customers that people will scream from the rooftops, tell their friends, family, colleagues, neighbors, everyone, including people who don't even want to listen. This is why Tesla doesn't need to waste money advertising, aka tricking people into buying your product. The best part is no part. The best process is no process. And the best department within your organization is no department within your organization. It's amazing how few companies seem to understand this. And while those in the mainstream finance media are finally starting to figure out Tesla makes compelling electric vehicles, everyone, apart from a few nerds who watch YouTube videos, read Twitter and so on, is completely ignoring Tesla energy at their peril. Give it maybe 5 or 10 years and people will start to figure this shit out too. This quote from Tesla owners Silicon Valley. Thankful to be part of the Tesla virtual power plant. It's pretty insane to think I can play a role in keeping energy prices low and reduce usage of fossil fuels by just using the sun. Tesla owner Silicon Valley must have ran out of characters on that tweet and forgot to also mention getting paid to participate. Win-win-win. Sharing a little shot here from the app. Virtual power plant. Active event. 28 minutes left. We covered this recently if you guys are unsure what's going on. A bunch of Tesla batteries collaborating together to provide energy to the grid when it needed it. When the shot was taken, almost 3,000 homes participating, producing 20,752 kilowatts of energy. Once again, I want to underscore the financial impact to participants. This isn't just helpful to the grid. You actually get paid for your help. Quote, Tesla virtual power plant with Pacific Gas and Electric Company, PG&E. As part of California's largest virtual battery, you help keep energy prices low and reduce use of fossil fuels. Win-win-win. During events, you earn $2 for every incremental kilowatt hour sent to the grid from your Powerwall. This is a literal fucking money printer. Tick a box. Join the virtual power plant. Get paid $2 per kilowatt hour. It's literally a no-brainer. This is the future of energy. Virtual power plants. Distributed energy. You don't even need rooftop solar. A battery is all that's necessary. As I've mentioned previously, these batteries have software that can pull energy off the grid during off-peak times when energy is cheapest and sell it back to the grid, energy arbitrage. This is the future of energy. People are not getting this. I know it's early days, but I'm talking about this now because in 5, 10, 15 years time, when this is a multi-deca-billion-dollar business and people are really starting to figure out the meaning and the significance, I'll have been banging the drum for a very long time. Let me put it this way. Tesla now, today, is showing signs of the exact same level of disruption in terms of the energy industry. And I'm talking about energy generation, storage, and supply. We're looking at the supply part here in particular with the virtual power plants. The same level of disruption to the energy generation, storage, and supply industry as the automotive industry. People are only just starting to maybe come around to, oh shit, Tesla really is actually selling a lot of these vehicles. Wow, maybe they are actually going to disrupt the entire ICE industry. I mean, this has been obvious for like 10 years, but hey, better late than never. And the exact same level of blindness to what Tesla is doing in terms of disrupting the energy industry is now happening too. It is going to take literally years, and I mean many years, before people realize what's going on with these virtual power plants. That's why I'm telling you guys and girls now. Think about how long it took for people to figure out what Tesla was doing to the automotive industry. And now apply that exact same scenario to energy. If you can't read between the lines here, opportunity. And now on to what appears to be an extremely juicy leak hinting at the next location for a Tesla Gigafactory. A perceptive RJD here on Twitter posting this. A job ad for a Tesla recruiter in where else but Quebec, Montreal to be specific. Job category, HR. Job type, full-time. What to expect? A great recruiter stands apart by excelling at talent identification, attraction, and assessment, and by developing deep partnerships with the business and within HR. This next line is quite the hint. Tesla is looking for a high volume, an extraordinary recruiter that stands out by doing all of the above combined with strong business acumen, a passion for their craft, and a genuine commitment to providing an unforgettable candidate experience. In short, we're looking for a high volume recruiter of humans in Quebec. Let me think about this for a minute. Lots of humans to be hired by Tesla in Quebec. Does anyone have any ideas why Tesla would be hiring lots of humans to work in Quebec? Any ideas? It's definitely absolutely not a potential new Gigafactory site, is it? That's definitely not possible, right? Definitely doesn't make sense. You'll thrive at Tesla by striking the right balance between flexibility and efficiency, project management and influencing. One hire at a time, we are finding the talent responsible for changing the world of energy and transportation and moving us forward to a more sustainable future. So, there's definitely absolutely no chance that the next Gigafactory location will be announced and it won't be in Montreal, Quebec, obviously. In all seriousness though, pretty strong sign. It's not evidence, not proof, but it's a very strong hint. That being said, as I've been repeating over and over and over for a few years now, I personally believe there's a few obvious next locations for Gigafactories. Another happens somewhere in America. Could be in the United States, could be in Canada, somewhere on that continent. In addition, another European Gigafactory, maybe the UK, but it doesn't really matter. And another somewhere in Asia, most likely in China. I will be stunned if we hear of a location outside of one of these areas. United States and or Canada, Asia, most likely China, and another in Europe. I think these are the next three most obvious choices, but hey, I could be wrong. And now onto some very juicy, better late than never news from Government Motors. Over on the CNBS website, quote, GM offers to buy out Buick dealers, aka Steelers, aka Stealerships, that don't want to invest in EVs. Key points. General Motors is offering buyouts to US Buick dealers that don't want to make investments in the brand's transition to exclusively offer all electric vehicles domestically by 2030. The buyout offers are the latest efforts by Government Motors to accelerate the company's electric vehicle plans and transform its sales network, aka just copy what Tesla's doing. 10 years too late. All of Buick's roughly 2,000 US franchise dealers, sorry I mispronounced that, Steelers, will be given the opportunity to take a buyout. Global head of Buick told the Wall Street Journal, quote, not everyone necessarily wants to make that journey, depending on where they're located or the level of expenditure that the transition will demand, he told the publication. Quote, so if they want to exit the Buick franchise, aka fuck off, then we will give them the monetary assistance to fuck off. A company spokeswoman on Friday confirmed the buyout plans to CNBS, but declined to disclose the expected cost, a lot, or how many dealers GM anticipates will take the offer. In my opinion, most of them. Many Buick Steelers also sell GMC vehicles or another of GM's US brands. The company offered similar buyouts to Cadillac Steelers in 2020. About 320 of those 880 retailers accepted the offer rather than assume expectations to invest at least $200,000 toward upgrading Stealerships for electric vehicles. Buyout offers for Cadillac dealers range from about $300,000 to more than $1 million. A person familiar with the plans previously told CNBS. This is a clear sign of things to come. The car stealership model doesn't make any sense. Unless you're into some really kinky stuff and have some unusual fetishes, and hey, I'm not judging here, whatever you're into, I think it's safe to say that most people don't enjoy the experience of going into a car stealership, bending over, getting fucked in the ass, negotiating, haggling, getting pressured, the whole sleazy salesman stereotype, not knowing the actual price they'll be paying for the vehicle before they turn up at the dealership, then just as you're about to sign the paperwork, discovering that it doesn't include any of the things you thought were already included with the vehicle. This is an archaic, outdated model that needs to go. In the future, car dealerships won't be a thing. They will not exist. They make little sense. Tesla has paved the way with direct-to-consumer sales. Just order the car online. This is definitely a sign of things to come. In my opinion, car dealerships who are intelligent will accept these buyout offers and get out of the business. Because in either case, there will be no car dealerships in the future. Take a buyout now or go out of business. Take your pick. And here we go. I've saved the best till last. This is without question, and I really do want to underscore that because I often talk in hyperbole on this channel. This is not one of those cases. This may in fact be the most severe case of brain damage as it relates to Tesla I've ever encountered. I actually mean that. And that really is saying something. We are, of course, talking about the highly reputable credit rating agency known as Moody's. First, let me set the scene here. We're looking at a great tweet here from Tesla Boomer Mama, aka Alexandra Mers on Twitter. If you want to nerd it out, highly recommend you pause the video. I'm just going to get to the crux. What we're looking at here is the world's largest companies by market cap, or at least many of them. Tesla slotting in at the number 5 position. Above them, Apple, Microsoft, Alphabet, aka Google's parent company, and Amazon. Some gigantic fucking companies. Plenty of others on the list as well. Notice the color coding here. We're going to get more into that in just a moment. If we scroll across, we'll notice things like cash to debt, debt to equity, debt to EBITDA, debt to revenue, and Altman Z-score, an extremely important number. And then we have Moody's and S&P's credit ratings. I don't want to spend too long on this, but let's just simplify things. The darker the green, the better. As we move closer to yellow, not so good. Orange, red flags for days. Notice something. Moody's currently rating the top 4 companies by market cap, AAA credit rating, AAA, AA2, and A1. Despite some reasonable red flags here, including debt to equity, not so great, cash to debt, not so great, and so on. Alphabet and Amazon not in amazing shape. Contrast that with Tesla, whose cash to debt ratio is the second best. One more time. The second best on the whole fucking table. The second best. Debt to equity, the 5th best. Debt to EBITDA, the 4th best. Debt to revenue, the best. Altman Z-score, the best. Yeah, Moody's credit ratings. Tesla not even investment rated. Credit rating, 3rd last. We've got best, 2nd best, 5th best, 4th best, but 3rd last credit rating. And the same shit for the S&P. Let's zoom out a little bit here. Take this full thing in. Again, just keep things real simple. Orange bad, yellow bad, green not so bad. If you look at this objectively, the numbers that relate to Tesla's credit worthiness, contrast those with all of the other companies here, this just does not make any sense. What's worse? Legacy automotive manufacturers, in the breakout down the bottom here, it's a sea of orange and yellow, yet the credit ratings on the right here, it's a sea of green. Toyota. Yeah, that's right, Toyota. Headed for bankruptcy later this decade. Better credit rating than Tesla. Volkswagen, same. Mercedes-Benz, same. Government Motors, same. Stellantis, same. Honda, same. Hyundai, same. Nissan, same. What's going on? Well, we finally have an answer. Initially, I was somewhat puzzled. Why is it that Moody's would ignore all of the data, all of the evidence? And then I thought, oh, you know what? They're probably just hiring for diversity. We need a few people suffering from severe brain damage making decisions at this company just to be super inclusive. That would explain things. Well, it turns out I was wrong. It's not just a few people with brain damage, it's the entire fucking organization. This may be one of the all-time classic examples of hubris significantly outweighing intellect. Alexandra recently wrote an email to Moody's in which she essentially asked, hey guys, what the fuck is going on with your Tesla credit rating? Please explain. They actually replied, and in doing so, have completely and utterly self-immolated. This is amazing. Let's read this remarkable response. This is going to go down in history. I mean, I just can't even. Again, no hyperbole. All-time brain damage here. There's been some doozies, but the hubris, the arrogance, the bias, the incompetence, this is just next level shit. Thank you for reaching out to us. For reference, I copied below our considerations for an upgrade of Tesla. See press release January 24th. The considerations are not so much of a quantitative nature. In other words, we acknowledge that we are not actually looking at the numbers, but more qualitative. In other words, riddled with our own biases and assumptions. That's right. In the first fucking lines of this email, Moody's representative explaining, yeah, so just to explain at a really high level, we've decided to ignore all of the numbers, revenue, profitability, you know, all that stuff that actually matters, the amount of debt they've got. No, ignore that. Don't worry about the revenue. No. Ignore all the numbers, the quantitative stuff, the stuff that actually matters. Instead, we're going to overlay our own biases, our qualitative opinions. But it gets better. Important. This is going to be hard. Importantly, we are looking for a broadening of the company's product lineup. I'm going to share some more thoughts on this in just a moment. Today, Tesla remains narrowly reliant on primarily 2 models, albeit highly successful ones. Note also in this respect that one of the models was first introduced in 2017. Is that supposed to be a... What? Is that relevant? Huh? Please don't tell me that they're arguing right now, oh, it's 5 years old. That's a problem. This is like shitting on the iPhone 14 because the original iPhone was released. What? More concrete prospects for a broader vehicle lineup would be regarded as a positive development in this respect. And the entire company resigning in disgrace, I personally believe, would be a positive development for Moody's. Let's read the final line here from their January press release. The ratings could be upgraded if Tesla successfully expands its global footprint, maintains a strong competitive global presence as other automakers offer an increasing number of battery electric models. Remember, the competition is coming and Moody's are really scared. And improves its product breadth. Tesla's ability to sustain an EBITDA margin of at least 7%, measured excluding the contribution from emissions credits, and a consistent, prudent financial policy are also important considerations for higher ratings. Further, Tesla will need to maintain very good liquidity, including ample cash and considerable committed availability under its revolving credit facility. Regards, somebody who should not have a job. There are insufficient words, at least in the English language, to describe the idiocy here. Let's talk through a few reasons why this is one of the dumbest things I've ever heard anyone say about anything. No hyperbole. Allow me to reframe and restate what we've read in this email response to Alexandra. Hi, we're Moody's. Tesla is a very special and unique company, and we've decided not to apply our typical methodology of looking at the fucking numbers. No. We don't care that Tesla effectively has no debt, that they have about $20 billion of cash on hand, that they're bringing in multiple billions of dollars of profits every quarter, that their products are so compelling that despite insane production expansion globally at 4 different locations on 3 different continents, despite industry-leading profit margins, despite staggering return on capital, incredible capex efficiency, despite all of the numbers, the financial numbers, the metrics that actually matter to determining how creditworthy this company is, we are going to ignore all of those and instead impose our own biases in this one unique situation, in this one case. In addition, we're going to prove unequivocally how much our hubris outweighs our intellect by determining that Tesla needs more products, more vehicle models, in order for us to determine them as creditworthy. That's right. We're going to ignore the evidence that with just 2 models, Tesla is already dominating everyone, everywhere, has wait times, 3, 6, 9, 12 plus months globally, insane profits, has had to raise the price of their vehicles just to keep demand in check by 10, 15, 20, 30, 35% over the last 18 months. We're going to ignore all the evidence. We're going to ignore the fact that Tesla's vehicles are so good they sell themselves. Our brains are so tiny. Our hubris, so great. We cannot understand or comprehend how, let alone why, a company would be producing just 2 extremely high volume vehicles and making more money than anyone else in the automotive industry doing so. This does not compute. The only possible way for an automotive company to be successful is to have 69 different models, because more models equals more creditworthy. Obviously, we're so intelligent, in fact, that we've decided that economies of scale don't exist. It's better for a company to be spread extremely thin. Instead of streamlining their processes, streamlining the parts and components, sharing things in common, having as much overlap in common, being able to buy parts in bulk at a cheaper price than anyone else, being able to make products in bulk at a cheaper price than anyone else, instead of being able to invest in equipment like gigantic casting machines that don't make sense on lower volume vehicles, instead of having an insane competitive and financial advantage by having so few product models, 1 category killer per category, instead, we're going to assume that if Tesla's doing something different, dare I say better, than any other automotive company, they are wrong, it is a mistake, and therefore no credit upgrade for you. This is truly astonishing, just absurd. There aren't enough words to describe this. If I worked for Moody's, I would be ashamed. In a nutshell, what we've just heard from Moody's is, hey Tesla, you're doing it wrong. Despite the mountain of evidence, the numbers that matter, demonstrating you're actually doing it right. In fact, you're not only doing it right, you're doing it better than any other automotive company. In fact, better than just about any other company on the planet. Again, these are based on actual numbers. This isn't me just making up an opinion. These are based on numbers. We're going to ignore all of the numbers that prove that you're an extremely creditworthy company. In fact, one of the most creditworthy companies on the planet, because it's not our job to look at the numbers and determine whether or not the numbers suggest you're creditworthy. Instead, it's our job to tell you that you're doing it wrong, despite the numbers painting a very different picture. That's right. In this one special case Tesla, just for you, we've decided to change the rules. Who cares about the quantitative stuff, the numbers? No. We're instead going to project our own biases, our own assumptions, our own opinions, and our own criteria onto you, because you're a very special company. And unless you introduced 6 more models yesterday, we'll just ignore the billions upon billions of dollars you're printing every quarter, $20 billion of cash you got available, the fact that you're a self-funding company, have essentially no debt whatsoever. We're going to ignore the wait times, the competitive advantage, the profits, industry-leading profits, I might add. We're going to ignore literally everything, because we're Moody's, and our hubris clearly outweighs our intellect. Have you guys heard of the word incompetent? It was literally invented to describe Moody's. Absolute fucking morons. This is stunning. I mean, stunning. It also won't age well. But then again, a lot of things people have said about Tesla in the past haven't aged well. The arrogance of these clowns is astonishing. Yep, our rules, the numbers. Let's impose our own beliefs, our own biases onto this company because we know better than the numbers. Now, some of you may be wondering, Stephen, why does it even matter? Who cares? I mean, they're obviously clowns. They obviously don't know what they're talking about. They're obviously incompetent. They're obviously biased. What's new? Why does it even matter? And the truth is, it doesn't really matter. But it is relevant if you own Tesla stock. See, truth be told, I hope the folks at Moody's continue to exemplify the Dunning-Kruger effect and continue to withhold investment-grade credit rating for Tesla as long as possible. The longer these morons consistently self-immolate, refusing to upgrade Tesla despite all the numbers, all the evidence, the more they continue to be blinded by their hubris and bias, the better. Why is that? Well, this comes back to Tesla stock. See, I am a retail stock investor, so what I do when I decide should I invest or not, first I engage my brain, second, I use it, and third, I act accordingly. Whereas, there are some, in fact, there are many investors, institutional investors, pension funds, and so on, box tickers, managing capital for other people who have criteria, what types of investments they're allowed to and able to invest in. You see where this is going? Credit rating is a box that many of these folks need to tick. Needs to be investment grade credit rating from Moody's. Tick. Wait, Tesla is not investment grade. Oh, we can't buy Tesla stock. Oh, okay, well, we won't buy Tesla stock then. This Moody's credit rating, worthless though it may be, is like a dam. There's so much pent up potential demand, potential investment dollars for Tesla stock because these funds can't tick the box. Oh, it's investment credit rating. They can't invest in Tesla stock. The day, if it ever happens, that these morons upgrade Tesla's credit rating to investment grade, we will see an absolute fucking tsunami of new big money investment in Tesla. What happens to the stock price? Well, if I was a betting man, I'd probably say it goes vertical. So, as somebody who's still accumulating and believes Tesla is the best risk-adjusted opportunity in the stock market, I would rather Moody's continue to be completely off the mark on this and still be rating Tesla as absolute trash. Junk is the term. Because that prevents these big money investors who need to tick their box from investing in the stock, artificially suppressing the price, meaning a better deal for me. So I'm all for it. I really, really want to underscore this. But I'm also somebody who can't not point out the absolute absurdity. Moody's current credit rating for Tesla and their rationale as to why it's where it is so embarrassing, so shameful, so astonishingly absurd. It just defies belief. I'm going to say it. These folks, at least those involved in the reasoning, I'm using that term pretty loosely, the rationale, again, using that term very loosely around the current credit rating on Tesla and their response. These are some of the dumbest motherfuckers on planet Earth. I just want to underscore this. Dumbest motherfuckers on the planet. Now, of course, if somebody from Moody's is watching this video, they're thinking, this emotional Tesla fanboy, he's just angry because I don't give a shit. Like I said, the cheaper Tesla stock, the worse the credit rating, the better for me. I'm still accumulating. I want you morons to continue to be wrong. The longer, the better. But as I said, I just can't not point out this absolute insanity. This is remarkable stupidity. I've rarely seen a better example of sheer idiocy and hubris. If anyone from Moody's does happen to be watching, I'd just like to ask the question. Looking at the data, the numbers on screen right now, the quantitative stuff, I'm sure even you could agree that Tesla looks like it's investment grade based on everything else here, right? You know, based on the metrics that matter, cash to debt, debt to equity, debt to EBITDA, debt to revenue, the Altman Z-score, never mind industry-leading profit margins, insane wait times. I could keep going on. No matter which way you look at Tesla, if you actually look at the numbers, literally one of the most creditworthy companies on Earth. So the question I have, how severe must your brain damage be? How overwhelming your hubris? How all-encompassing your arrogance to arbitrarily impose your own qualitative metrics, to be so incredibly idiotic, to not understand economies of scale, the brilliance of Tesla's business model of having a single category killer per category to benefit from the parts in common, the processes in common, the machines and equipment, the robots in common, the economies of scale, the simplicity, to not understand the brilliance of Tesla's business model. In fact, to not only not understand, but to think it is a weakness is just stunning. You should all resign immediately in disgrace and embarrassment. But I hope you don't, because like I said, the longer this clown show can go on, the longer this dam can prevent some of these box-ticking investors from actually buying Tesla stock, the better for me and everyone watching. I've rarely seen something as broken as Moody's. I hope you clowns realize the entire world is laughing. This is farcical. Truly, as I said, embarrassing. No hyperbole. I personally believe you should all just immediately give up. But I hope you don't, because I'm going to keep buying. I would just personally like to thank Moody's for unequivocally demonstrating that the bell curve is real. If anywhere on Earth there's a less competent organization than Moody's, I'd love to know. Please, let me know in the comments below. If I was a little bit more PC, I'd say, you know what? This seems a little bit ridiculous. This seems a little bit absurd. This is nonsensical. It just doesn't align with reality. But I'm not here to be politically correct. I'm here to be accurate. Moody's, as a collective, some of the dumbest, motherfuckers on Earth. That is quite the accomplishment. So, hope you guys and girls have enjoyed this video. I can't even, this is hard. Like I said, I literally have never seen this level of idiocy ever. It's just incredible. Takes the cake. This is all time the dumbest I've ever seen, ever, period, ever. And that is really saying something. The flat earthers have more of a point than these fucking clowns. So just to quickly recap today's video, besides the clown show, which I've discussed at length, I just can't even. Tesla stock down again today, but we heard the S&P 500 off to one of the worst starts in history to a calendar year. So it ain't just Tesla that's getting absolutely creamed. Tesla's recruiting efforts may suggest the location of the next Gigafactory. Tesla's virtual power plants continue to make a massive impact and go completely unnoticed by the mainstream finance media and most investors. Government Motors has finally realized that the Stealership model is a thing of the past and are trying to get out ASAP. And a big brain Tesla bull with a great track record on Tesla has increased his Tesla stock price target to $360 per share, 33% upside from where we are today. So I hope you guys have enjoyed today's video. I'm going to be honest here, my brain literally hurts. I mean, it's literally hurting. I'm not even kidding. It actually hurts. Maybe it's a coincidence, but I don't think so. And don't forget, if you guys would like to support the channel and unlock over 100 exclusive videos, my Tesla stock price targets, and loads of other content and perks, you can do so by joining Patreon with the card in the corner or the link at the pinned comment. So, I'll see you over on Patreon. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Even the brain dead morons currently working at Moody's. Hey guys, thanks for watching. If you want to support the channel and instantly unlock over 100 exclusive videos, plus my 10-year Tesla stock price targets and loads of other perks, including optional access to my Tesla valuation model, join our growing community of thousands of supporters on Patreon with the link in the pinned comment. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. And if you're still watching, you're awesome. Please let me know your thoughts on today's video in the comments below and click the card on screen now to watch the next video.